Raleigh, North Carolina is currently experiencing a crazy split personality market. Home buyers are thinking all homes are overpriced, sellers think they're pricing homes fairly, and there's really some specific things driving all this. It's all about perspective. Some people see houses flying off the market and they think the market is hot. Other people drive by and they see for sale signs in yards for weeks, if not months, with price reduced signs up. And they think the whole world's coming to an end and the Raleigh housing market's collapsing. So bottom line, the whole real estate market is a mess and home buyers feel stuck and home sellers feel stuck and everybody's really stressed out. So if you've been lying awake at night worried you're about to make the biggest financial mistake of your life by paying too much for a house or waiting too long until the market explodes, then this video is done specifically for you. Today I'm going to tell you some really crazy stories about what we're seeing happening in the Raleigh area real estate market so you can protect yourself either as a home seller or a home buyer. So really quick, before we get into some crazy stories, I want to give you sort of a market snapshot as to where we are right now. As of April 2026 in Wake County, North Carolina, which is where Raleigh and Cary are located, we have seen about a 13% increase in homes on the market, which means we have nearly 3 months of inventory available. And while that is technically a seller's market, it pretty much feels balanced at this point. Median home price right now is coming in at about $465,000, and interest rates are sitting at about 6.45%, and it's been kind of bumping around between 6% and 6.7% for the last few months. On paper, this doesn't sound like a crazy market. Again, it sounds pretty balanced and pretty normal. But in the real world, house by house, neighborhood by neighborhood, it's just downright schizophrenic. And the average home right now is selling at 99.1% of list price. But be careful, this data is a huge giant trap. And we're gonna get into more detail on this trap a little bit later in this video, but it is one that's causing people to way overspend on houses or lose out on the homes of their dreams. And the first thing that's happening right now is the 3% golden handcuffs are finally coming off. So what are the 3% handcuffs? Well, anyone who bought a home or refinanced a home back in 2020, 2021 got an amazing killer interest rate of around 3%. And a lot of those people are pretty much stuck in their homes. These are homes that by and large, these folks probably couldn't afford in today's interest rate numbers. But they're stuck because they have such a killer rate. And maybe that home is obsolete for them. Maybe they've outgrown it. It was too small of a home. They've got more kids now, bigger kids, and they need more bedrooms. Maybe the kiddos have gone off to school and they don't need as big of a house. Maybe there's been a divorce situation. Any number of lifestyle issues may have come about. And these people don't really want to be in these houses, but they're stuck in that amazing interest rate. It would be more expensive for them to move and get a 6.5% rate now on a smaller house than just staying put where they are. But again, the 3% golden handcuffs are slowly coming off. All of these life changes that I talked about a minute ago are happening to some people, along with job relocation, just the general need to move to another area. Maybe an elderly family member needs you to take care of them, something like that. So some people, even if they don't want to move, are having to move, are being forced to move by these life changes, and it's adding more additional inventory to our market. And we recently had some clients who had to deal with this. We had some folks come to us from our YouTube channel here, all the way from Colorado. They found an amazing home with our help in Clayton, North Carolina. They absolutely loved it. This was back in 2021, lived there for a couple of years, and they were totally happy. And then something changed in their lives. Back in 2021, their company let them work from home mobily, and then all of a sudden in 2023, they were required to come into the office. And working from home from Clayton, no big deal. It's remote. But when you had to drive from Clayton to Durham like these folks did, day after day after day, it became a big deal. Long story short, we ended up helping them sell their house in Clayton, move to a house in Durham. Yes, they got a higher interest rate, but they decided that the lifestyle, quality of life advantages of not having to drive so much outweighed that 3% interest rate. And so that's just an example of someone who had to get out of the 3% rate and ended up finding a better situation because of it. So again, bottom line, there's a good number of people out there who either need to move or have to move, and it is freeing up some inventory in our market and giving home buyers a little bit more inventory to work with. So let's get back to that split personality market we were talking about a few minutes ago. Some homes are sitting on the market for a long time, and typically those homes are ones that maybe are trying to sell in a new construction neighborhood where the homeowner bought the home just a couple of years ago and the builder is still building, and now they're having to compete against new construction. Or maybe the home is outdated and needs a lot of work, and most buyers out there just don't want to do any work on a home they're just buying. Maybe it has a really bad slopey backyard or front yard, making it difficult to park a car or have any fun in the backyard with kicking the soccer ball or whatever. Or maybe the home is on the outskirts of the triangle where long commutes would have to happen for someone to buy that house. Or maybe it's the dreaded home seller that doesn't have to sell but is willing to sell for the right price and has got their home overpriced. These homes and many, many other types are lingering on the market, and it's giving a reputation for the Raleigh market that things are not going so well. So those are examples of homes that sell slowly. How about homes that sell quickly? Well, there are homes that are selling very, very quickly in our market. These are homes that have neighborhoods with tons of amenities, neighborhoods that have pickleball courts and big swimming pools and clubhouses and fitness centers and walking trails and all kinds of stuff for the residents of the neighborhood to enjoy. Maybe it's a home that's been super updated. Those homes really, really attract people, especially if they're in like downtown Raleigh. Also, homes that have really, really great, amazing social scenes. I'm thinking specifically of Bedford at Falls River in North Raleigh, a neighborhood that I used to own a home in. This neighborhood has tons of different clubs, and therefore it was super easy for people to come in and make friends. It was a very, very social neighborhood. Another example of a social neighborhood would be Wendell Falls in Wendell. I've taken clients through Wendell Falls many times in the past, and literally homeowners there in the neighborhood would stop you as you're like touring homes and say, "Howdy, welcome to the neighborhood. We hope you're going to be our neighbor." And it felt really Stepford wife-ish to begin with, but then you realize, no, that's just how friendly people are in these social neighborhoods. And that's a really big draw for people. Lots of people are willing to pay extra dollars to be in a social neighborhood versus just a regular neighborhood where you just say hello to your neighbor as you're pulling in your garage and you don't see anybody the rest of the night. Another big group of homes that sell really, really fast are homes with pools. It's so hilarious for me to say that because I remember the time selling real estate in the Raleigh market where if I would go to a listing appointment or another agent would go to that listing appointment and try to help these folks sell their home, we would oftentimes tell them they need to fill in the pool. It just wasn't something people wanted. It was a complete deterrent and would cause your home to sit on the market forever because people didn't want to deal with a pool. Now, after COVID, people want to have the luxury resort style life at their home. And so in just about any home that has a swimming pool is going to absolutely sell quickly and sell for top dollar. You may not be able to get dollar for dollar out of the value of the pool you put in. Put in a $200,000 pool, you're probably going to get $100,000 worth of value out of it, but your home is not going to sit on the market for any longer than a few days likely, which means you're going to likely have multiple offers, which is going to drive up the price of the home that those folks are going to end up paying, which means you are going to recoup a good bit of the money you put into that pool, and beyond that, you got a pool to enjoy for the time you live there. And of course, we're still seeing homes in the super popular hot cities. I'm talking about Cary and Raleigh and Durham and Apex and Holly Springs and more that are absolutely flying off the shelves. These are towns that are really, really popular, and people moving to our area or currently living in our area absolutely know that, and they want to live in those towns. But these are probably not the top reasons people are selecting a home and driving up home values. One of the biggest reasons we're seeing is people are flocking to areas and neighborhoods with top rated schools. About half the people that have contacted us here from our YouTube channel have listed schools as one of the very top things they are looking for in their new home and would end up to be a major deciding factor of which city they live in. Buyers not only want top rated schools, but they also want schools where they feel like their kids are going to fit in and make friends and have a really good quality of life. And that's really the secret thing that's driving a lot of demand and prices in our market. There's one neighborhood in Wake Forest where this is really dramatically showing up. Half of the neighborhood goes to a highly rated school, and another half of of the neighborhood goes to a lesser rated school. And it's really affecting home values on one side of the street versus another. It's just an example of how schools are driving not only home values, but demand. And again, this split personality is really driving a lot of confusion in our Raleigh marketplace. A lot of people that are seeing homes linger on the market think they can make lowball offers on all the homes in the market, while other people are seeing hot homes fly off the shelf really, really quickly and think the whole market is overheated and that they've got to be prepared for bidding wars to buy a house that they want to buy. This is creating a lot of stress, creating a lot of confusion, and frankly, creating a lot of anxiety in our market. So before we get into this huge trap that both buyers and sellers are falling into right now, most people are wondering how you navigate this crazy market. Is it worth even trying to buy or sell a house now? Or should you wait? Is the market just too crazy right now? Our advice to you is to try to keep your emotions out of this process. We know it's a very stressful process, but you need to just arm yourself with knowledge. The very fact that you're sitting here watching this YouTube video is certainly a great start, but arm yourself with knowledge about the specific areas you want to buy in, and realize if you're thinking about buying a home, your goal is to find the perfect home for you and to pay the very best price you can. Whereas on the competing side, sellers are looking to sell their home for as much money as they possibly can get. And so it's really, really important for you to understand where the other side is coming from. And again, you need to arm yourself with knowledge. That all being said, there is a huge trap that both buyers and sellers are falling into right now. We call it homes are selling at average list price trap. People hear that homes in Raleigh are selling for 99.1% of list price, and they assume that means every single house is selling at list price, and that's absolutely incorrect. That number, average list price, is just that. It's an average. It's a big picture number. It doesn't tell you what a specific house is worth. You see, some homes sell for full asking price. Some sell for way under asking price, and some sell for way over asking price. And why is this? Because every single home is different. The location is different. The buyer's perception on the house is different. The pricing is different. The lots may be different. And therefore, demand is different. So when you have a house that sells for list price and you have another house that sells for $50,000 over list price and you have another house that sells for $50,000 under list price, the average of that is the list price. And that is a faulty number. Which means if you're out looking at homes and you come across a home that is severely overpriced, if you have it in your head that all homes are selling for list price, you may think, I've got to pay this price, which could end up costing you many thousands of dollars by overpaying for the house. Conversely, on the flip side, if you come across a house that looks like a steal, that may either be because the home has some defect, or it may be a really popular trick that some home sellers and their agents are doing. That is, price a home slightly under the real price for the home in order to drive up demand, drive up the number of offers they get, and of course end up causing a bidding war, which would drive up the final price of that home. If you make the mistake of thinking all homes sell for list price, and you're interested in that home, you may make an offer that is actually lower than what you should have made on that home, which means you're probably going to lose out in a multiple offer situation to someone who knows the game and bids more than what the list price is. Just something you need to be aware of. So just remember, average is a market trend. It's not telling you what an individual home is worth. And sellers, you need to also be aware of this trap as well. If you overprice your home, don't assume people are going to come in and pay list price for the home just because the average sales price in your area says X. It all depends on how the home is priced to begin with as to what someone's going to pay for it. And of course, it also depends on all those external market conditions we talked about earlier in this video. So bottom line on all this, make sure you arm yourself with knowledge to know if you're, as a buyer, or overpaying or underpaying. And if you're a seller, if you are overpricing your home or underpricing your home. So before we get into this crazy story of what we experienced recently, I know this is stressful. I know this is all confusing, this crazy market that we're in right now. But it doesn't have to be that way. Our team spends time sitting with our clients to learn about their lifestyle, to learn about their goals, and to work through what it is they're afraid of. Because in this market, the data is only half the story. The best agents understand Raleigh isn't some one monolithic market but it's literally hundreds of micro markets. And where you buy a home is going to be completely different from where your friends bought a home on the other side of the triangle. Call or text us and we will be happy to guide you through this process, whether you're a home buyer or a home seller. So now, back to this crazy story we promised you. As many of you know, we have been struggling looking for our next home for literally 2 years now. We've identified a few neighborhoods that we really like, and a home came on the market in one of those neighborhoods. We went and saw the home. We considered making an offer, but we decided to take it to the next step and analyze what was going on in that micro market to see how things were working out. And there was a good number of homes that had been on the market for quite a while and it had price reductions. So logically, regular people would have seen this home and saw that other homes on the market were lingering and would have thought the best course of action would have been to make a lowball offer. But we took it a step further and looked and analyzed the homes around and saw that they were not as amazing as this home. As we always say, model homes, homes that look amazing, sell quickly. So this home that we were interested in was one of those model homes, it turns out. There was an open house. Tons of people were flocking to this open house. Demand was high, and we knew this house was going to go for more than asking price. Ultimately, we decided to pass and not make an offer because we didn't want to get in a bidding war. However, we did continue tracking this home until it had closed, and it ended up closing for about $50,000 over asking price. So if you had been one of those regular folks that thought the market was the market, you might very well have made a lowball offer that would not have even been considered. So this is all something that really confuses most people. They're online seeing homes that are active. They're not seeing homes that are pending under contract, and they're not seeing how long those homes sat on the market and how many price cuts these homes. That data really matters as to how much you should actually pay for a home in that specific neighborhood and, in fact, on that specific street. And again, I know this is all confusing. Feel free to reach out to us. We are happy to help you clear this up and help you find the home of your dreams. And certainly if this video is helpful, we think you're going to like this one as well. Like and subscribe to the channel if you haven't already done so, and we'll see you on the next one. Take care. Bye-bye.